But in the meantime, let's put the spotlight on the pharma sector now. According to Elara Securities, the sector returns may not be as great as seen in the last 1 year, and valuations are also quite high after the recent strong stock price performance. Bino, Pathiparampil, analyst of the pharma sector and also the head of research at Elara Securities, is with us. Bino, good morning. Thank you for joining in. So, when we had this bout of market volatility, when there was a lot of mid-cap, small-cap correction going on, that is when there was a, propensity to go back to pharma stocks. But tell us why you think that the returns may not be as high this year. Is it just a valuation issue, or is there an underlying business reason to it as well?
Oh, good morning. Last 1 year, we saw that a few things quite a bit changed in the pharma sector, which also led to the valuation re-rating in the sector. One was mainly the US generics business. For most companies, the US generics business grew much faster than expected. There was improvement in profitability in that business. This led to a significant earnings upgrades in most of the large pharma companies, which has a large presence in the US market. Coming to the domestic market, we started off FY24 with a very weak growth in the domestic market, which also in the last quarter, in Q3, we have seen a significant pickup in the domestic market growth rates. Looking at other areas in the healthcare as well, hospital segment growth also continued to be strong. So all these led to some earnings upgrades in the sector, which led to valuation expansion as well. And last year, we have seen a very big return in the sector, in the index overall, in the healthcare index. Going forward, I wouldn't expect that sort of earnings upgrades to happen. Also, valuations having re-rated quite a bit. We may not see significant returns coming from valuation re-rating also from these levels. But at the same time, the earnings growth continues. The US generics business market continues to be strong and could even further improve from here on. And the domestic market growth could also stabilize at 8 to 10% or 11% as expectations are. So that can continue to give returns from these stocks, but it cannot be as high as what we saw in the last 12 months, in my view.
Oh, absolutely. Aurobindo Pharma is up 134% in the last 1 year. It's a 138% rally in the last 1 year for Zydus. It's a triple-digit up move for Lupin. Across the board, you're seeing a 50, 60, 70% kind of a move for Alchem, Alembic. Even something like a Sun Pharma has given a return of 60%. Bino, you spoke about premium valuations now after this kind of an up move. Could you put the valuations in context? Where do they stand right now? How does it compare with historical levels? And why do you think, the valuations from here on, have we hit peak valuations for the pharmaceutical stocks?
Sure. When we look at pharma company valuations, we also have to consider a few things like in the US generics business, there are often big products that are part of the current profit of the company. Some of it may be recurring, some of it may not be recurring. So we need to do a bit of adjustments. If we do a bit of those adjustments and look at the companies, most of the large companies, maybe except for Aurobindo, are trading about 30 times 1 year forward in my assessment. This is a significant improvement in valuations over the last 5-6 year time frame and close to the peak levels which we last saw probably in the 2014-15 time frame. So yes, we are quite close to the peak valuations, but for the time being, I do not see any significant risk of correction. Also because I expect some more earnings upgrades to continue at a slower pace, though, over the next 2 quarters.
All right. Hi, Bino. Good morning. Good to see you. Bino, what about Wockhardt? That one, it appears there is some promise right now. They came in, they raised money, which got lapped up as well. Any view on the stock? Any triggers, if at all, that you're tracking?
I do not have a coverage on the stock, but I believe that they have one innovator drug in the antibiotic space, which is promising, but all depends on how well the clinical study results for the drug come out to be.
Okay. Bino, do you look at, have you seen the latest news flow on Lupin, where they plan to transfer the trade generics business in India to their wholly owned subsidiary? Well, the total amount they'll receive is not very high, 120 crore. But what's the significance of this for Lupin? And do you also look at Mankind Pharma? And your thoughts on Chris Capital exiting with this block deal, which is expected today of 2.9% stake?
Sure. The transaction in Lupin is between the subsidiary and the parent, so I don't think it is very significant from a stock price perspective. Many companies do that to streamline their business processes. And in some cases, maybe sometime down the line, there could be potential for value unlocking, etc. As of now, I believe this is a process of streamlining of the business processes. Mankind Pharma has done well. The growth, it's a relatively more domestic market focused pharma company, which is getting the benefit from improvement in growth rates in the domestic pharma market. Like the market after a lull early 2024, early FY 2024, we have seen growth pick up significantly in Q3, and the stock has also done well in the last 12 months. Naturally, some of the early investors in the company would be looking to book profit, and private equity players will have their timelines to close the fund, exit investments, etc. So I wouldn't think that has anything to do with the fundamentals of the company.
Sure. So, Bino, to just wrap it up, given everything that you said, which stocks would remain your top picks? You know, they say that at times it's worthwhile paying for even a high PE stock as long as growth keeps coming in. So, not sure if that holds true for, let's say, a Divi's or not. Or should you look at something like a Dr. Reddy's, where prices haven't moved and there is some valuation comfort?
Sure. Despite the run-up in stock prices, I believe Zydus Life Science and Sun Pharma look attractive given the solid upcycle we are seeing in the US generics market. Same with Aurobindo as well. Aurobindo may have some valuation catch-up also to do, giving a little extra bit of returns, although there is a little bit of risk from the potential FDA action on their plan, which was inspected in February. Dr. Reddy's has underperformed other companies in the last few months, so the valuation looks relatively better than what it was 6 months back. Although one has to keep in mind that Dr. Reddy's has a higher contribution from generic Revlimid, which is more of one-off in the US. I would also start looking at positively on the domestic focused pharma companies where the market growth has picked up. It has not run up as much like the US focused pharma companies in the last 2-3 months. So some sort of relative valuation comfort is emerging there as well. We have seen the diagnostic space also, the stocks correcting in the last 2-3 months, possibly some sort of valuation comfort is emerging there as well.
Bino, thank you very much for your perspective and insights. Have a good trading week. It's